Hi guys, you're watching Editors Roundtable. It was a tough week for our markets. We gave up nearly 1% at the index level, but one sector stood out, and that's IT. The Nifty IT index soared nearly 4.5% this week. I spoke to a few analysts, and they're saying that IT perhaps is now seen as a US macro play. Because the potential cut in US corporate taxes opens up space for budget increases, and maybe discretionary spending also comes back. And if you remember, in Trump 1.0, in his earlier term, IT had underperformed because of restrictive immigration policy. H-1B visa rejection rates went up. But that time, the IT industry was caught unprepared. And this time, in the last 8 years, they have increased their localization. So according to analysts, the localization, that is the number of employees that they hire in the US, stands at more than 70%. So even if there are adverse restrictive immigration policies, it's not likely to hurt the Indian IT companies because they are well prepared. So on the positive, you've got a potential for discretionary spending coming up because America is perhaps going to become great again. And plus on the sidelines, the rupee depreciation that we've seen over the last 2 days is also positive for the margins of IT companies. Shiv, so come in. Is there a case to increase allocation to technology? Technology is not performed. And now, even in the Q2 earnings, we did see green shoots in BFSI recovering. So all in all, would you go out there and increase your allocation to tech?
Well, I'd say IT services this week, has done well in addition to what you said, also because it's viewed as a defensive. And when some of the other sectors were selling off, there was capital perhaps rotating out there. I'm going to mention 2 points, which I think are really interesting from a structural perspective on IT services. So without commenting on what's going to happen this quarter or next quarter. Number one, historically, it's never been a great macro play on the US economy. It's been actually the opposite when companies are looking to cut costs and they want to move their budgets or through migration work. A lot of that has come to IT services. And the number 2 point I'll make is that if you heard the earnings calls from the big cloud vendors like Amazon and Google, Google mentioned on their last earning call that 25% of all the code that's written at Google was done through AI. Amazon mentioned that they migrated 36,000 applications, which would normally take hundreds of developer years in the quarter using AI. And when you talk to them offline, they've got very big plans in terms of what they're going to do regarding taking some of that development in-house using AI. So I'm not quite sure what the implications are, but I think it's going to be very interesting once this current migration work is over, which is getting the data ready for Fortune 500 companies to get them ready for AI, and we are into that. What does this mean longer term for IT services companies? I think that's a very big question.
Shiv, you've believed and owned private financial names here for a long time. I mean, it's not a new kind of bet for you, and they did very well, and then they did not do so well for a few years. But is the time here now for private financials, valuation-wise, and of course, actually largely valuation-wise, because everything else is so expensive and maybe there's a bit of an earnings deceleration elsewhere as well?
Well, a couple of things happening in financials, right? In the last 1 year, you've seen how tight monetary policy has been. And with a lot of money moving into the equity markets from domestic retail, there's been pressure on gathering low-cost deposits for some of the financial institutions. But in the last quarter, that was changing. And you could see some of the big banks growing their deposit bases quite healthily. I think the interesting thing in financial services is that the larger banks and the larger, more well-run NBFCs will now see an increasingly better time in the coming 12 months. And I say that for a couple of reasons. Number one, you saw in the last year and a half or 2 years, a lot of lenders come into the market, especially in the unsecured space. And you saw the RBI also come down and get concerned about it. And what you're seeing right now is the impact of all of that lending. But the bigger lenders were a lot more cautious, and the largest bank was a lot more cautious. And if you see what they're doing now they're talking about over the next 12 months, increasing their exposure to that space as the data changes. And this is very typical. This has happened over cycles, which is why the big companies in financials don't change and they get stronger with each cycle. I think the second thing is that I think monetary policy will loosen, over the next couple of quarters. And if that happens and liquidity in the system goes up, that's another benefit to the financial sector.
Shiv, thank you very much for your insight. Enjoy your weekend. And with that, folks, it's a wrap on this week's broadcast. Thank you very much for watching. But next week's a big one, right? First, it's the last of the earnings season, and then we've got a very special Global Leadership Summit. But till then, thank you for watching the show. Enjoy your weekend and stay with CNBC TV 18 for more news and updates.